What's up? It's Prince Donnell, the founder of Jumping Jack Tax, and today we're going to be discussing the basics of sole proprietorship. What is a sole proprietorship? Am I a sole proprietor? And how the heck is this even taxed? Now, why is this important for me to talk about? Because I think we've all seen from 2019 to 2020, the boom in online businesses, people making money outside of their 9 to 5 because they simply have to, or because the opportunity arises from your Facebook, your Instagram, your YouTube, and your OnlyFans influencers, right? You got your people who are generating revenue outside of their 9 to 5 because they simply have to due to pandemic and the uncertainty of your job. So you got to go out there and you got to make some money. So with that said, you stepped into the lane of entrepreneurship. You're making money outside of your 9 to 5, which that is great, by the way. You're starting to take ownership and you have multiple streams of revenue, but there are financial responsibilities that are now required of you. Okay, so let's start off by talking about what is a sole proprietorship. Very simply put, a sole proprietorship is an unincorporated business that's owned by one person. And guess who that one person is? That one person is you. And with you as that one person, as a sole proprietor, there is no distinction between you and the business. There's no legal distinction between you and the business. You are the business, you, okay? Your time, your skills, your efforts, you're the person. Everything surrounds around you. Congratulations, again, for stepping into this lane of entrepreneurship. So that's what sole proprietorship is. Now, let's talk about who is a sole proprietor, right? I'm going to put this into a few different buckets here. Let's start off with our most infamous influencers, because I think that, obviously with online business, something that I've had a benefit to. If you're making money on Facebook, Instagram, YouTube, OnlyFans, like I said, and you have money that's being generated from people that are paying you for sponsored posts, for ads, to put on their clothes, to try their tees, all types of stuff. If you're earning income from that, you be considered a sole proprietor. If you're somebody that's working freelance, such as a photographer, your videographers, your makeup artist, if you're earning income as a side gig from doing that outside of your 9 to 5 and people are paying you for those skills, then you be considered a sole proprietor. You also have your independent contractors, right? You're considered a sole proprietor. Okay. Now, if that's you and you're saying to yourself, well, Don, I did earn income outside of my 9 to 5. What do I do from here? Well, that's a great question, because there are financial responsibilities that are now required of you when you earn income, any income for that matter. OK, and we're going to talk about that. How is a sole proprietorship taxed? Now, odds are, if you made money from any of those different industries that I spoke about, from influencers, freelancers, independent contractors, side gigs, from that matter, the odds are you're going to receive a 1099K or a 1099 MISC. Okay, that's going to show the amount of money that you earned. Okay, now when you receive that money, here's what's important. As a sole proprietor, you're responsible for paying your own taxes. Now, I know what you're saying. Well, Don, when I was an employee working at my job, I never actually had to pay any taxes. Normally, I receive a tax refund. You're 100% correct. And I'll tell you why. Because when you're working at your job, your employer is actually paying the taxes on your behalf. When you receive your paycheck, the taxes are already being withheld and taken out of your check. So you're receiving what's left after the IRS receives their money, which that's a whole nother video we'll talk about later on. So at the end of the year, when you get your W-2 and you go ahead and get your taxes filed, you're most likely going to receive a tax refund if you paid more in taxes than what you owed, or you're going to just break even and you don't receive anything, which I think is the best scenario. Now, as a sole proprietor, all the income that you're earning, there's no taxes being withheld, which means that you're going to be solely responsible for making sure you pay the taxes to Uncle Sam if you are receiving a profit. OK, so I'll say this one more time, because I have a lot of people that I talk to that are sole proprietors like, Don, I didn't know that with the money that I earned, I had to pay any taxes on it, which is nothing wrong. I'm not saying that there's nothing crazy about that. You just simply didn't know. Yes, if you earned income, you have to pay taxes if you earned a profit. OK, now let's talk about Let's talk about how this is taxed here. Now, when you receive that 1099K or that 1099 MSIC in the mail, or you download it from your merchant service, from PayPal to Stripe or whatever system that you're using to receive the money from your side gig or from your influencer work and everything, when you receive that money now, what will happen is you now are going to have to file that on a Schedule C. Okay, I won't go deep into what a Schedule C is, but basically how is it taxed is with the income that you earned, you're now going to look at the expenses that you had, right? What are your expenses in order for you to be an influencer, in order for you to have a side gig? So I'll take, for example, a photographer, okay? We just had our photographer, Hugo, come here. And he just took amazing photography for us for Jumping Jack Tax for this upcoming tax season. Now, let's say Hugo drove here and he had to drive here in order to do the photo shoot for us. Let's say Hugo had to buy a brand new camera with lenses and he had to get the backdrops and all these different things. That adds up. That's an expense in order for him to earn income as a photographer. Okay. Now, let's just take basic numbers into account. If Hugo earned $5,000 in income as a photographer for this upcoming year, 2020. And Hugo had $3,000 in expenses from the equipment that he had to purchase, from driving back and forth to meet clients, all different things, right? Different expenses. Then Hugo's going to be left with $2,000. That $2,000 now is what Hugo is going to be responsible for paying taxes on. Okay. And now he'll be responsible for paying federal, state, and self-employment tax on that profit. So as a sole proprietor, you're paying taxes on the profits. You're not paying taxes on the earnings. Okay. So that's very important. And in a later video, I'll talk about all the deductions that you're going to be able to receive as a sole proprietor. Not the video today, but basics. You earn income. You either receive a 1099K or 1099 MISC. On that earned income, you're going to look at all the expenses, which you should be tracking all of your expenses, keeping all of your receipts on everything that you paid for in order to operate as a sole proprietor. When you get that, we're now going to put that on the Schedule C, which you go to a tax professional, then we can take care of that for you. We go ahead, we get your income in there, put your expenses in there. We come down to a profit, and on that profit, you'll end up paying taxes on that. Now, a simple recommendation is this. Since if you're somebody watching this and you normally work the job, which is something that I did for a long time, you're not used to owing money to the IRS. You're not used to owing money to Uncle Sam. So what could end up happening is you get hit with that tax bill at the end of the year, beginning of the year, during tax season, and you're like, oh my God, I owe $3,000, right? Oh, $3,000. I don't have the money because you might have spent it anything, on your livelihood, whatever it may be. Now you're stuck with a tax bill for $3,000 and now you got interest and penalties because you can't pay it. My recommendation is go ahead and start making your estimated tax payments. Okay. Now, this is in the video to talk about how to calculate your estimated tax payments. But as a sole proprietor, you have the ability of making estimated tax payments throughout the year to the IRS. And by doing that, this tax season, now you're not going to be stuck with a huge tax bill that you can't pay, which now becomes totally draining to you. And you're like, oh my God, I owe money to the IRS. You're so nervous. You don't want to do that to yourself. Okay. So let's just recap again before we end this video out what a sole proprietorship is. A sole proprietorship is an unincorporated business that's owned by one person, you, where there's no legal distinction between you and the business itself. You are the business. Okay. This is for my influencers, my freelancers, my independent contractors, people that's working side gigs, doing what you have to do to earn income to put food on the table. How is it taxed? Okay, you're going to earn income probably from a 1099K or 1099 MISC. When you earn that income that you receive on those forms, you're going to look at all of your expenses that you earned that you had to pay in order to run your sole proprietorship to earn that income. Then what'll happen is we'll go ahead and subtract that income from your actual expenses, and we're going to get down to a profit or we're going to get down to a loss. And then from that point, if it is indeed a profit, then you'll have to pay taxes on that profit, and you're going to be responsible for paying your own taxes as a sole proprietor because you're an entrepreneur. right? You're taking on all of the risk. You're taking on all of the liability. Okay. It's you. So it's important that if you're moving into this lane of entrepreneurship, it's not just about making money. It's also the financial responsibilities that are going to be required of you as well, because I see so many people that end up with tax liabilities in year 1, 2, 3, and 4. And now you end up owing a couple $1,000, $10,000 or more to the IRS. And now you're like, oh my God, what do I do from here? And now we got to figure out how to clean up the mess and put you on payment plans, taxes and penalties and interest that are going to be incurred, because the IRS, they want to charge you interest and penalties. Trust me, that's how they generate revenue. So they have no problem with charging it to you. My goal is to help you to make that money, but also be fiscally responsible, and also to make sure that you're not paying any interest and penalties to the IRS, and that you're keeping your finances in order. Okay. So this is a simple video breaking down sole proprietorship. In the next video, we'll talk about deductions. We'll talk about the pros and cons of sole proprietorship, because there are the difference between a sole proprietorship and a single member LLC, and establishing one, and what's the difference. We'll talk about all of those things. But in the very beginning, if you're watching this, you could most likely be a sole proprietor. These are the basics that you need to know when coming into this game of entrepreneurship. I hope this was able to provide you with value and clarity so that you can move forward in your journey of entrepreneurship and earning additional revenue outside of your 9-to-5. Again, this is Prince Donnell, the founder of Jumping Jack Tax, and we're out.
Got my taxes jumping, now my bag coming with that major money, dripping blessings. That might buy a house for my mama, bad credit. Don't even sweat it, cause they'll repair it, ain't no question. They can do it, it's some